So yes, friends. Uh, Today this is the first time that I am being conducting a webinar. So please pardon me for any of the mistakes. So today I wanted to share something with you that why I have made a presentation like think like an owner perspective. Before beginning, a standard disclaimer is that I am not a SEBI registered advisor. The discussion done for the stock and detail mention are for educational purpose only. This should not be considered as buy, sell, or hold. Please make your own due diligence and consult your advisor. Yes, I do have vested interest in the stocks, and I have also purchased few in my friends, basically friends whose portfolio I handle. CSB has nothing to do with this presentation. So we will begin the presentation. Uh, why the title is like think like an owner? What is the philosophy behind it? Well, when someone buys a stock, when someone invests in a company, uh, what they do, they generally look at the prices all day long, repeatedly every day. Even I do sometimes because as I'm handling the portfolio to decide to invest or not. But when people jumps to trade the stocks, that's where they make a mistake. They are not thinking like an owner; they are thinking like a trader. Suppose if you buy a house, you are not going to see the prices every day. Even if it fails, even if you hold the purchased a house, and even after 10 years the prices has not risen, then also you are not going to sell it. Similarly, applies with the jewelry. You are if you have purchased a gold jewelry, if the prices fails, you are not going to sell it in a panic, right? The same should be applied to the stocks also. You should look at the business, look at the uh, product the business is doing, the way it is doing, the ethics behind it, rather than looking at the stock prices. Yeah, I can understand that there are ups and downs, there are high volatility, but should not be impacting your decision if you made the right analysis. Sometimes when the prices falls like the previous year's March April fall, it should be taken as an opportunity. I know that it was a panic sale, and uh, people do not have idea what to do at the time, but those kind of situations are generally an opportunity to increase the stake rather than going into the panic mode. So that is why you should have to think like an owner. You are owning a stock, you are owning something which is going to give you cash flow in the future, which will going to increase your wealth. That is the primary focus which you should make on. So with same perspective in mind, I have tried to do a short analysis of a company named CSB Bank. I will share with you all the details right away. CSB Bank is formerly known as the Catholic Syrian Bank Limited. Just a brief timeline about the Catholic Syrian Bank, aka CSB Bank. It was incorporated in 1920. Yes, it's a 100-year-old bank, and I should say it has taken its rebirth in the year 2018 when the Fairfax has acquired 51% of stake at a price of 145 per share. You can say that इसका जन्म वापिस से हुआ है. It's just a born entity in 2018. It is then listed on the exchanges in December 2019. IPO price was somewhere around 199 a share, and today it has a market cap of just 4,000 crore, with 500 branches with the A team. The main focus is the last one, the A team. Uh, See, when a company is starting, the primary focus should not be on the financials or historical values. Though it is a 100-year-old bank, the future prospects should not be kept into consideration looking at the old prices, old financials, sorry, because the bank has went into a big management restructuring, which I will discuss with you later. So The management is just like in startup. You do not know what the product will, what will happen to the product in the future. But the investments, the VC invest in the startup looking at the quality of the management, their execution ability, and if available, the management's historical execution uh, scenarios, whether they did well in the past or not. So that is what it is. These criteria should be kept in mind while analyzing companies like CSB, because historically it was something else, and today ex- uh, it is something different than what it used to be, because there is a lot of changes, especially in the management. So, as I mentioned, that Fairfax India Holdings has acquired 51% stake. So, uh, a brief about Fairfax India Holdings. Fairfax is basically owned by Prem Vatsa. Prem Vatsa is famously known as Canadian Warren Buffett. He's the chief executive of Fairfax India. He had made some pretty good investments in India also. Few of his listed companies are Fairchem Specialty, previously known as Adi Finechem, in which recently Preview Organics got acquired and now demerged and listed on the exchanges. Second, India Infoline, IIFL, that is India Infoline. Again, four companies demerged from the India Infoline and got listed on the stock exchange. Third is Quest Corp and Thomas Cook. Few of its unlisted stocks are Sanmar Chemicals. I believe its IPO is coming soon. Bangalore International Airport. Uh, BIL BIL is probably signing an agreement with an investor, a pension fund, after which they will likely to come up with an IPO. NCML, GoDigit. GoDigit is a very good company indulged in the insurance sector, and Seven Island. Now, the main part of the this is basically called a code telling. It's a code telling बोलते हैं. But why I'm discussing Prem Vatsa's brief history over here? Because Deepak Parekh is the advisor and board member of almost all of their transactions, which is something very interesting to know. See, this is Fairfax letter to shareholders. And recently, they have published these letters to shareholder on the March, in which they have mentioned a few details about the CSB Bank. Now, Mr. Rajendran is the CEO of the bank since last 4 years. He has been assigned the role to uh, to hire a top management to nurture them and to create an organization which focus on productivity and performance. Basically, CSP Bank was an IBA bank, a government where the employees were of government payroll structure. Mr. Rajendran roll out policies which include performance and productivity. Then they hired parallel model, which I will discuss ahead, and it has reorganized its operation into three verticals: retail, SME, and wholesale. Now, one more important aspect, which you won't find it anywhere else. It is only available in this Fairfax letter. That Paresh Shuktankar, Mr. Paresh Shuktankar, he was the former deputy MD and member of board of director of HDFC Bank. Is an advisor also. You will find lot of connection with HDFC Bank over here. Mr. Paresh Shuktankar is a very senior member and deputy MD of HDFC Bank, former deputy MD. He is an advisor. Deepak Parekh is also an advisor. Like I mentioned, Deepak Parekh is also an advisor and is provided advice on almost all of their transactions. Now, about the deal of Fairfax and CSB Bank and Catholic Syrian Bank and Fairfax. This is the first takeover of an Indian bank by a non-banking finance entity. They got none other private bank got this, or Indian bank got this uh, approval from RBI for a takeover by a non-banking finance entity. The owner, Fairfax is holding 51%. The owner has to reduce its stake mandatorily as per RBI's norms from 51% to 15% in 12 years. So this is something which we have to look out when we are planning for a long term. but it's still 12 years is a long road ahead. Foreign investor cannot sell their sales shares in the first 5 years. Now, after the main purpose of the investment, why RBI gave approval to Fairfax is because uh, it will increase their CRAR, it will strengthen their balance sheet, and it will help them clean their books. After the takeover, the first and foremost objective of the bank was to clean their books. They have uh, they have shown every possible loans. They have analyzed every possible loans, and they have made a provision and recognized NPA wherever possible. And they took a lot of hits and cleaned their books, which was very important when you try to invest for a longer term. Now, one very interesting fun fact is CSB Bank recently pegged second rank amongst Indian banks in the Forbes World Best Banks 2021 list. Now, even I was surprised to see CSB coming second in the world's best banks by Forbes. But uh, it's really amazing to see such a small bank coming listing over there in the best banks out by the Forbes. The Forbes data were basically uh, collated by Statista. It was made by Statista. So they surveyed around 43,000 customers of several Indian banks, and out of that, they filtered out and given the rankings based on various parameters. Now, uh, before tuning in ahead, it is very important in a company so small like this that instead of looking at the fundamentals, looking at the valuations, looking at the financials, it is important to look at the management. Because even in the yesterday's Berkshire Hathaway meeting, more emphasis was given on the management also. That even putting a single rupee into any investment, it is better to look at the management and then only invest in that company. So, a brief, uh, a brief details about few of the recent joinees in the key management, which can be seen here, and you will find a lot of connection with the HDFC Bank. First and foremost, it is the most important person, key manager. It's Mr. Pralay Mondal. He is the president of Retail SME. He is joined as a president of Retail SME Operations and IT. He just joined recently in September 20. He is an IIT IIM pass out, and before CSP, he was ED and head of retail banking at Axis Bank and key person in Yes Bank, and around 12 years of experience in HDFC Bank. He was one of the oldest person in the HDFC Bank who has witnessed the transformation of the bank over the years. And he was also had a few stints with Stancy and Wipro. Second is Mr. Neeraj Dhawan. Along with Pralay Mondal, Neeraj Dhawan has also joined in September 2020. He has joined as a Chief Credit Officer, Retail SME, Strategy and BIO and Analytics. He is a CA ICW. And before CSB, he was a CRO, Chief Risk Officer at Yes Bank. And he has around 27 years of experience in banking. Same connection like G Capital, HDFC Bank, ICICI Bank, ABN AMRO. So one more HDFC Bank connection. Third is Ms. Neena Ahmed. She has joined in November 19 as head of operations. Before CSB, before joining CSB, she was associated with Lakshmi Vilas Bank, and she also has an exposure of merger between ABN AMRO and Royal Bank of Scotland. Next is Mr. Shyam Manish. He joined in November 2020 as an head SME and NRI banking. He is an engineer from Bangalore. Overall 24 years of experience with Yes Bank, ICICI, again HDFC and G Countrywide in senior roles covering retail SME and SME. Next is Mr. Narendra Dixit. He has joined in November 2020 as head of retail banking. Prior to that, he was associated as with Axis Bank as national head of liability sales, and before that, he worked with Yes Bank, and also he was a senior VP of sales credit card in HDFC Banks for 15 years. So again, one more very senior management from HDFC Bank joining CSB Bank. Next is Mr. Harsh Kumar. He joined as Chief HRO in August 2019. He had 12 years of experience in banking and also he has a connection with the HDFC Bank. He was associated with HDFC Bank before joining CSB. Now, just like the key management, it is also important to look at the board of directors. So, a few of the directors I have mentioned here. Mr. Sumit Maheshwari, basically he is a representative of the Fairbridge Capital, that is Fairfax representative. Miss Bhama Krishnamurthy, she is an independent director and she has served as a CGM of CSB. Miss Sarmila Karve. Now, these two board of directors are very important from my point of view because Miss Sarmila has joined in July 2020. She is in connection with PwC as an ethics and business conduct leader. She was also an head of audit and head of risk and quality. So, from the risk, audit, compliance, ethics point of view, I think she is a very key director in the bank. And last is Mr. Sujin Choksi. He got appointed recently in March 30, 2021. I believe most of you must be aware that he was the former MD of Group Finance Limited. Basically, again, an HDFC connection. Right? So, lot of key management, senior key management from the HDFC Bank, ex-HDFC Bank has joined CSB in this senior position and they are now steering the company. This is why the management, I made a first slide of the management. It is for this reason that uh, this, these people have demonstrated their execution capability in the past also. And with this small bank, they are going likely to repeat the same experience, the knowledge they have gained from that experience, they will implement it here also. Now, uh, I will move to some of the recent events that has happened in the CSB Bank. CSB was started within 2,700 IBA employees. IBA basically means government pay scale employees. It has started with 2,700 IBA employees, and right now this is a transcript of Q3. And in the Q3 transcript, during the meeting itself, there was an agitation by the clerical and sub staff because 223 employees were given a VRS. Clerical and sub staff, 223 clerical and sub staff were given VRS. So there was even during the transcript phone call, during the phone call, there was an agitation by the employee, which can be listened to by everyone on the line. So Mr. Rajendran took up the matter and disclosed it that it is basically they are planning for an VRS of 223 employees, which will cost them around 80 crores in the next quarter. Means I believe it will impact their PNL in this quarter or next quarter. So the cost economics here of the employees are that the salary of one IB employee is equivalent to 3 private employees. Means they could replace one employee of the IBA with three private employees without impacting that cost. So you see they are giving from 2,700 employees to 1,600 employees and still going down further. This will reduce the IBA staff and increase the new young blood, which will help them increase their sales very dramatically in the coming quarters. See now, here it is mentioned that they began with 2,700 IB employees and down to 1,600. And whereas you see the total headcount has increased to almost 4,000 employees because of the branch expansion, which will come up in the coming slides. And in the recent announcement, they also mentioned that they have taken so much private employees more, and due to this VRS, the total workforce of the bank having association with unions and IBAs is only one third only of the total workforce. Means you can see that the employees from private is joining the bank, on the private payroll, they are joining the bank, and from the IBA, they are leaving the bank. This will increase their productivity dramatically. As more and more young employees will join the company, so naturally that will help them. Now, not just hiring from the bottom level, even the key management, as I have mentioned in the earlier slides, have joined it from the big institution. In the QC transfer, they have mentioned that the basically CSB Bank is indulging mainly in the gold loan and SMEs. So they have hired officers, gold loan officers in many branches directly from the gold loan companies, because they have better experience over there. They know the delivering. They can execute the delivery very faster. So they hired the specialists from the gold loan companies to CSB. Even they were not into two-wheeler and they started it recently, for which they hired a person from Bajaj Finance who has implemented it at a policy level and drafted policy and started a pilot in two-wheeler segment. Before COVID, they were disbursing around 1,000 two-wheeler loan in a month. Right now, they are disbursing around 2,000 two-wheeler loans in a month, which is just a pilot project, and it will expand geographically across all the branches. So, looking at the NPA of the performance of the two-wheeler business, they will expand it geographically. So basically, they are hiring specialists for the specialist loans from the reputed companies and the private companies who have relevant experience. Now, about the expansion. Uh, the company has opened 37 branches in the 9 months period. The company is planning to open 1,000 branches in next 4 years. 1,000 branches is so high a number. Right now, they are somewhere around 500 branches. They have opened 37 in the first 9 months. And if you see recent announcement, on 26th March, the bank has opened 89th branch for the current financial year. And just after 4 days, they have made another announcement that total number of branches opened during the year is 101. So if you see that during the year they have opened 101 branch, out of these, uh, 37 branches only were opened in the first 9 months. Remaining all the branches opened in the last quarter. So, if you look at the economics of the branch, it takes around 1 year to 1.5 year, depending on the geography, metro, non-metro, urban, or rural branches. It takes 1 to 1.5 years to break even. So, the efforts made during this year will result in the profitability in probably next 1 and 1.5 years. Now, they are planning, they have already crossed 500 branches. Now they are planning to reach it to 1,000 branches in next 4 years. Means approximately 150 to 200 branches per year you can expect the bank to open. So the break-even point of those branches will be reflected post 1.5 year or 1 year, depending on the locations. Now, even while expansion also they have taken a very shrewd method. What they did is, this is a snippet from the Q1 translate. As you all aware, that PSC banks were being privatized, were being merged with each other. So suppose recently that Dena, Vijaya and Bank of Baroda got merged. Now, where there are branches of Dena, Vijaya and Bank of Baroda simultaneously, BOB will close two branches and merge all the customers in the single branch to reduce the cost. Now, what they did is they targeted those branches, and because the life here they have clearly mentioned that life value of the furniture is 10 years, but to the seller it is at scrap value. So this way they took the whole branch and they got it readily furnished available branch at throwaway prices. By this they have reduced the cost of opening the branch. One of the most interesting points they have mentioned is that Mr. This is said by Mr. Ravindran that HDFC Bank has opened 400 plus branches in one quarter. This is very big number. They have opened 400 branches in one quarter. So I was bit intrigued as how as when did they open these branches and what was the scenario at that time. So I will dig a little bit on the HDFC Bank this aspect also and will try to compare the HDFC Bank's situation with the CSB Bank situation and what when will the cost break even happens. So this is an annual report of HDFC Bank 2004-5. At that time, they have a branch setup of 467, which is almost similar to CSB Bank. But their balance sheet size was very high. Balance sheet size was 51,000 crores. Whereas CSB Bank's balance sheet size is somewhere around 20,000 crores. So, not that big in terms of balance sheet size, but yes, it's not an apple to apple comparison, but looking at the branch aspect, because CSB Bank has opened 100 branches in just 1 year, and out of that, 70% branches in just last 3 months. So the balance sheet will improve dramatically over next to 2 to 3 years. Now this is an snippet from the HDFC Bank year 2008-9. And now remember, 2008-9 was a scenario when there was a major recession, and similarly there was a very less rental, commercial rental was going on, and at that time, just like CSB is on branch expansion spree, HDFC Bank also was in the branch expansion. In the year 2008-9, they have increased their branches from 761 in 321 cities to 1400 branches in just 1 year. Means doubling the branches in just 1 year. This was done in 2008 now. Now, what was its impact on the balance sheet? Let's see. This was the 2008-9 balance sheet. The asset size was somewhere around 1,83,000 crores. Now, let's see what's the impact of these expansion ahead. This is an HDFC Bank balance sheet from this criminal. Now, as you can see here, balance sheet size was at 1,83,000 in 2009, and you see in just 4 years, 2013, it doubles from 1,80,000 to 4 lakhs. So the balance sheet got double in just 4 years. Forget the bottom line. Bottom line might have increased dramatically, but just the size of balance sheet got increased dramatically. So you can expect a similar situation in the CSB Bank when they take their branches from 500 at present level to 1,000 branches within 4 years, and you can expect the impact on the balance sheet going ahead. Now, as I mentioned, CSB Bank traditionally deals with mainly gold loans and SME loans and few of the other loans, but not in a major amount. So, when the new management joined from the different organization, they drafted at a policy level all the moved out the loans, they restructured all the loans, and they are relaunching their products along with the new products like lab, SMEs, and as I mentioned earlier, two-wheeler loans. So, lot of new product launches is happening, which you will see ahead. This is I will read as it is mentioned here because it is very important from the privileged members' point of view. I will read this sentence for you, which we will do immediately. Some of the products, channel distribution, manufacturer tie-ups, and also even we will have tie-ups at this stage until we launch our own product. On the wealth side of the business, we will also work with both for mutual funds and insurance. Anyhow, we have tie-ups. We need to create the right technology process, straight through process engineering and everything like that, and operations, etc. So, right now, the bank cannot give all the product, their own product to all the every customers. So what they will be doing, they will be introducing the products. They will be tying up with the third party like insurance and mutual funds. and they will create a channel first, they will create a distribution platform first, then they will introduce their own product for all the segments like wealth, for investment, for credit card, for mutual funds, everything. But initially they will work with tie-ups and then they will be on their own. If you look ahead in their financials, their CRAR is very strong, the balance sheet is very strong. So the analyst in the Q1 on call has asked that are they looking for an inorganic growth? At that time, Mr. Ravindran has uh, expressed his intention that they are willing, they are looking for an options. Even they are in conversation with DFS and Niti Aayog for the especially for the banks which are being privatized. Because what happens, these banks which are privatizing, they have a very big balance sheet size, but they do not have a proper process. Hello, they do not. Is my voice clear? In case you find anything, can please someone just message me? Is everything okay? So we'll continue here. Yes. So Mr. Rajendran has expressed his view that they are willing to, they are looking at the opportunities. They might look at the inorganic growth way also. But till date, nothing is in progress, and no press release has been issued by them. Now let's look at the recent results of the CSB Bank. Uh, you can see here that the net interest income, yields on advances, cost of deposit, these are all important, but should not be taken as an base because the parameters, the percentage, the ratios will fluctuate dramatically over the next few years because of the expansion. The expansion will lead to increase in cost. Cost will reduce the bottom line, whereas the due to expansion, the loan and disbursement will also increase simultaneously. So there will be fluctuations in the ratios, in the net, in the cost of deposits, NIM, all those things. But we should look at the product picture for a longer period. See, they are focusing more on the costing side. Their cost income ratio was 69%. It has come down to 49%, and they are still reducing it to further level. And like I said, the CR capital is very healthy. It is 21%. It is uh, as good as HDFC banks or Kotak Bank. I can understand that this is a small bank, but still the capital adequacy ratio is pretty good. Now, this is a very important point. Their prudential provisioning norms. See, every bank has to make a provision on the secured unsecured loan based on their asset quality. So, in this column, in this table, you will see that RBI has given the guidelines for the percentage which you have to make a provision. But the CSB Bank has a further stricter guidance to due to which they have to make an extra provisioning. This is a very conservative approach, and this is very good approach. Given that you are expanding quite fast, it is better to have a conservative approach and make a greater provision. This will definitely impact PNL in the shorter period, but once it will give comfortable position to the bank. Also, once it will reverse, it will come back to the PNL also. So bank is providing more provision to the loans than what RBI has given the mandate. This is very good when you compare it with other banks, because I believe no other bank is providing an extra provision than what was recommended by the RBI. Now, this is the geographical reach. Mainly, this was a South Indian bank, but now they are expanding across the geography and they are diversifying their business. See, this is where I was talking that they till now they were mainly focusing on gold loan and SME loans, but now they have started different loans too. Loan is such a loan where you will get higher yields, you will get lesser NPA, because uh, no one will make an NPA so faster in gold loans due to the emotions attached to the asset. So, and for the gold loan, they have made a tie-up with IIFL Finance. As you can see, this Fairfax linking with that, where IIFL will do a gold loan origination for CSB banks. Now, this is of SME banking, SME accounts. Pretty good, pretty decent accounts they have. They are not taking much risk, and the digital penetration. Uh, they are doing this, but it is at a very nascent stage. Now, this is of recent year. SBI Mutual Fund has given its intention to acquire 10% of stake in the bank. And if we look at 31st March holdings, they have yet acquired only 5% of the stake in the bank. So you will expect a lot of buying from the mutual fund from SBI Mutual Fund soon. This is a brief snippet of the CSB Bank. But I should again emphasize that you should not look at this financial of the bank, rather look at the subjective part of the bank. So this is why I said it. You should think like an owner, because the bank is expanding geographically. It is launching new products. It is dispersing conservatively. It is making provision aggressively. It is also in cost cutting. It is an excellent management and board and transparent policy. This will give me margin of safety to invest in the bank. That's why you should think like an owner and not an trader. I hope you like the video, the webinar. Please share your thoughts. If you have anything, you can directly mail me, message me. I hope you liked it.